Hello everyone and welcome back to Explain the Charts. Today is October 22nd, 2025, and we are looking at Apple, ticker symbol Apple, which has been making headlines by smashing through its all-time highs. Before we dive into the charts, let's cover the major news driving this incredible momentum. Just 2 days ago, on October 20th, Apple stock surged to a new record, hitting an intraday high of over $264. The primary catalyst for this is the overwhelmingly positive reception and strong initial sales of the new iPhone 17 series. A report from Counterpoint Research indicates that iPhone 17 sales in the first 10 days outpaced the iPhone 16 by a remarkable 14% in the crucial US and China markets. This has led to a flurry of bullish sentiment from Wall Street. Notably, Loop Capital upgraded the stock from hold to buy and set an ambitious price target of $315 per share. Other firms like Evercore ISI and Melius Research have also raised their targets to the $290 range, citing a long-anticipated iPhone upgrade cycle that could last through 2027. While there are some background concerns about Apple's position in AI and ongoing regulatory risks, the market is currently laser-focused on these stellar hardware sales figures. Keep in mind, Apple's next quarterly earnings report is just around the corner, scheduled for October 30th, which will be a massive event for the stock. Now, let's look at how this news translates to the price action on our daily chart. We can clearly see the massive green candle from October 20th, which represents the breakout to a new all-time high. The stock closed decisively at $262.24, shattering the previous record high of $260.10 set back on December 26, 2024. That old high around $260 now becomes our most critical new support level. As long as the price remains above $260, the bullish thesis remains firmly intact. Notice the significant increase in volume on that breakout day, trading over 90 million shares, which gives strong confirmation of the validity of this move. The price followed through yesterday, October 21st, pushing even higher to a new intraday record of $265.29 before settling slightly. This price action is a textbook example of a fundamentally driven technical breakout. Let's zoom in on the daily chart to focus on the past month's activity, which really tells the story of how this breakout developed. You can see that from late September through mid-October, Apple was trading in a relatively tight consolidation range, mostly between $252 and $258. There was a sharp dip on October 10th down to the $245 level, but buyers stepped in aggressively, and the price recovered quickly, signaling strong underlying demand. That dip was the launching pad for the rally we're seeing now. The move began in earnest on October 17th and then on October 20th, fueled by the iPhone 17 sales reports and analyst upgrades. The price exploded upwards, gapping up at the open and never looking back. This multi-day surge shows powerful conviction from buyers. Switching over to the 1-hour chart, we can analyze the intraday structure of this breakout. Here is the powerful move up on October 20th, followed by consolidation on October 21st. What's particularly bullish here is that after hitting the new high of $265.29, the price has pulled back slightly but is holding firm above the $262 level. This indicates that former resistance is now acting as support and buyers are defending this new territory. For shorter-term traders, the key levels to watch are support around $262 and resistance at the high of $265.29. A sustained break above $265.29 would likely signal the next leg up for the stock. Now, let's drill down to the 15-minute chart for an even closer look at the very recent price action. Yesterday, October 21st, the stock spent most of the day consolidating in a range between roughly $262 and $265. This tight range-bound action after a major breakout is known as building a flag or pennant, which are typically continuation patterns. For a day trader, this presents clear opportunities. One might look for a long entry on a confirmed break above the $265.29 high, with a target towards the next psychological level, like $270. Conversely, a breakdown below the $262 support could offer a short-term scalp opportunity, but this would be a risky counter-trend trade given the overwhelming bullish momentum on the higher time frames. Okay, let's pull back to the daily chart to recap and look forward. To summarize, our key price levels are crystal clear. Critical support is now at the $260 breakout point. Below that, we have secondary support zones around $255 and the psychological $250 level. To the upside, immediate resistance is the current all-time high of $265.29. Beyond that, we are in price discovery mode, looking at psychological numbers like $275 and then the analyst price targets of $290 and the big one, $315 from Loop Capital. So, what are the likely scenarios? The bullish scenario, which I see as having a high likelihood of around 70%, is that Apple continues to grind higher after this consolidation. If it can hold above $260, a move towards $275 seems very probable, especially if the earnings report on October 30th confirms the strong iPhone sales. A daily close above $265.29 would reinforce this outlook. The bearish scenario, with a lower 30% probability, would be triggered by a failure to hold the $260 support level. A close below $260 could spark profit-taking and lead to a test of the $250 to $255 support zone. A negative surprise in the upcoming earnings report is the most likely catalyst for such a move. The main thing to watch is that earnings report on October 30th. It will either pour fuel on this bullish fire or throw a bucket of cold water on it. Finally, a quick disclaimer. The information provided in this video is for educational and informational purposes only and does not constitute financial advice. I am not a financial advisor. All trading and investment decisions should be made with the consultation of a qualified professional. Please do your own research before risking any of your hard-earned capital. Thanks for watching Explain the Charts, and we'll see you next time.